Hi students, I hope you have a good day so far. In this video lecture, we'll look into the 10K reports, annual reports. We'll also look into these important steps of financial statement analysis process. So here are the learning objectives. We will try to understand the summary of the financial statement analysis process. We'll look into the 10K annual reports and where to find that 10K annual report. And we'll also see that what are the other informations available within 10K reports, because not only the financial statements, but there are tons of other information available in 10K report, which is very important. For example, the company's growth plan, its strategy to compete within the market, what do the management think that they have the strengths, and what are their competitive advantage over the competitors. So we'll look into those information, and those information are presented in the shape of items within the 10K. So we will try to adopt the 20-80% rule, where we which actually means that only sometimes 20% information is more important to comprehend the 80% of the financial health or the 80% of the situation around you. So in this case, it's the financial health. So we'll try to look for the most relevant information in order to understand the financial performance and health of the company. And then finally, we'll see that how we can get that data into the Excel and what should be the appropriate format within the Excel to do the analysis of financial statements in a better way, number one. And number two, let's suppose if you close that file and later on someone else reviews that, and it should be much more easy for the reviewer to see what analysis you have conducted. Or even if you are coming back to your analysis within the Excel file, what is the better approach? Like for every person, the approach might be different, but what is the general approach which turn out to be the better one in Excel? I'll discuss that. So let's move ahead and start with the summary of the financial statement analysis process. Now the first step is to locate the 10K report so that one can gather the financial statement in the Excel file from the 10K report. Once those 10K reports are imported within Excel, one need to do the formatting of those reports and double check the numbers. That, for example, is the sum of all the current assets is equal to the total current assets, because you cannot trust on the number uploaded as it is. Mostly in 90% cases the numbers are fine and their total is also fine, but I have experienced the cases where once I added the all the items within the current assets, it was not equal to the sum of the total current assets given in the 10K report. So you have to be careful that before conducting the analysis, the data which you on which you are conducting the analysis is clean and accurate. The second step is to know about the business segment of the company. You cannot simply start analyzing the numbers of the company without knowing what business that company into, and also what are the risks associated and what strategies management has formulated to compete within the industry and the market. So that is called actually a business environment and strategy analysis, and it is important, and it is as much as important as you are conducting the analysis on the numbers. So not only knowing the details about the or conducting the analysis on the numbers are important, but also you need to know about the company's plan and the associated risks, and also the strategies of the company, because these strategies eventually get converted into the numbers. For example, if a company is claiming or the management is claiming in the management discussion item or the section that the company is focusing more on the research and development, then are the research and development numbers increasing, or as a percentage of or the spending in research and development increasing as a percentage of the total revenues over the period of time, or it is actually going down, because the numbers will support eventually what management mentioned in their strategy or in their discussion. So all those strategies have to be transformed into the numbers. So you have to link both of these things with each other. So without knowing the or without conducting the business environment and strategy analysis, the financial statement analysis is incomplete. The third step is to conduct the vertical and horizontal analysis, which is also called the common size analysis and comparative analysis. And we again link them to the strategy. As I have just mentioned, in the vertical analysis, we'll try to see that we'll take up the base item on the balance sheet as the total assets, and on the income statement the total revenues, and see that with the items within the balance sheet, like what percentage of the total assets are stuck in that particular asset. For example, if we are talking about that the company is expanding, and if it is expanding, might be they are also now they will be also having more inventories, then that what percentage of the total asset is stuck in the inventory. So that percent actually tell us that if that percentage is high, this shows that that particular item within the balance sheet is more important. Likewise, for the income statement, we'll compute the percentage of the individual item uh, compared to the uh, uh, total revenues. That what percentage of, say, the net profit is of the total revenues. This will tell us that out of each dollar spent, how much out of each dollar earned, how much cents have been saved as a net profit by the company. So we'll try to do that sort of a vertical analysis. This is a vertical analysis. In case of horizontal analysis, we'll do the comparative analysis uh, based on the base year. So for example, if we'll take the base year of 2017, then we'll see that how the assets are growing compared to 2017 in 2018 and 2019. Likewise, we will also look into the income statement, that how the net profit is increasing in the subsequent years compared to the base year. And then we link that that increase in or decrease in the percentage of a particular, that increase or decrease in the percentage of a particular item link, and we'll try to link with this strategy. For example, if the company is saying that we are trying to reduce the operating cost, then we might see that even the revenue is increasing over the period of time, but the percentage of, say, the marketing cost or the administrating cost over the same period is decreasing as a percentage of the as a is decreasing over the same period of time. So for example, in 2018, the revenue grew by, say, 30%, but the operating cost only grew by, say, 15%. So it's not increasing with the same pace. So when something like that happen, when you are increasing the revenue at a higher pace or larger pace, and your cost is not increasing by the same pace, then overall it will give you a give you the better net profit in the end. And this is the main thing. We'll try to link that decrease or increase in the percentage of a particular item in the balance sheet or income statement, and try to link it with the strategies which the company's management is mentioning in one of the item within the 10K report. And that item is actually the management discussion and analysis item, and that is actually an item number 7. And I will go on that item within a few minutes. Then we will also conduct the ratio analysis. So what is the purpose of the ratio analysis? The ratio analysis has actually the five main parts. Number one is the liquidity ratio analysis. This another one is the asset management ratio analysis. So asset management is not mentioned on this slide, but just you can keep that thing or write it down that asset management ratios are also important. Then we have a long-term debt ratio analysis, profitability ratio analysis, and the investor ratio analysis. So there are total group, there are five ratio analysis within the overall umbrella of the ratio analysis. One is the liquidity ratio analysis, second one is the asset management ratio analysis, which is not mentioned over here. The third one is the long-term debt ratio analysis, which we also call coverage ratio analysis. And the fourth one is the profitability ratio analysis, and the fifth one is the investor ratio analysis. In the liquidity ratio analysis, the main purpose is like that help the creditors, the operating creditors, to see that whether the company will be able to meet is their cash obligations, which are which they have to meet within 1 year period of time. So if I'm a supplier, I'm more interested to know about the liquidity ratios. That so I'm like I might not be interested in the profitability ratio and investor ratios, because my role is not being the investor of the company. My role is, or I'm not the owner of the company. I am actually the supplier for the company, and I'm supplying the raw materials for the company. So the payment for the supplies are usually happen within 1 year period of time. So I wanted to see that whether the company have enough cash available with them, so that they can be able to, or cash or other like highly liquid assets which they can sell and convert them into the cash, and give my money back if I'm a supplier within 1 year period of time. So this is the purpose of conducting the liquidity ratio analysis, and the role is different of the supplier than the investor. So the supplier might not be interested in the other ratios, but the liquidity ratios more. Now if you are a banker and you are giving the loan to the company, or if you are a bond, or if you are a prospective bond holder, where you want to buy the bond of the company, and also then you are more likely to do and conduct the long-term debt ratio or analysis, or the coverage ratio analysis for the company. So the purpose over here is this, that whether in the longer run the company will be keep like will be able to pay the debt, and keep paying the interest payment. So whether these obligations are easy for the company to fulfill or not. The profitability ratios are obviously with more important for the owners of the company. So they want to see that how good company is doing, from the revenue, how much the company is saving as a profit, and from the overall assets, how those assets are generating the profitability. So the profitability ratio analysis users are actually the owners. And finally, the investors ratio analysis. If you are the prospective investor and you want to invest in the company, so the ratio analysis, investor ratio analysis, will suggest whether you want to invest in the company or not to invest in the company. One ratio analysis which is mentioned over here is the asset management ratios. So the asset management ratios are important because they will tell you that how effectively company is utilizing their assets, whether the assets are idle sitting over there, or whether the company is basically using the assets more efficiently and producing the goods and selling the goods. So the more effectively and efficiently the assets will be utilized, and so it means that the company will end up generating more profit. So all these ratios comes under the bigger umbrella of ratio analysis. So what the ratio analysis is all about? The ratio analysis actually help us link or develop the relationship between the two items of the financial statement. So it can be within the same financial statement, for example, two items from the balance sheet, or two items uh, within the income statement you are developing their relationship. For example, if you divide the net profit with the total revenues, it will give you the net profit margin ratio, and in this will give you the percentage of how much of the revenue is the company is saving for companies saving to either distribute to the owners or keeping the funds within the company, in other words retained earning. So this way two different items, when we link them with each other, we link them through the ratios. So ratio analysis is also important to compare the two companies of different sizes with each other. So the ratio analysis bring the companies of different sizes on equal fittings and compare their numbers with each other. So for example, one company can be very big. It has the numbers in billions of dollars. Their also expenses is in billions of dollars. Their revenues can be in billions of dollars. Another company is relatively small and their revenues might be in millions of dollars and expenses in the millions of dollars. But when you divide when you conduct the ratio analysis on them, you divide the $1 million number with the $1 million number and $1 billion number with the $1 billion number. So in that case, the once we'll get the ratio, that ratio will help us do the comparison of a smaller company with the large company, because it will bring both the larger company and the smaller company at equal footings, where we can compare their the ratios directly with each other, and thus understanding which company is doing better. There could be a smaller company having just numbers in millions of dollars, but that company might end up saving more from the total revenues compared to a company which is very large and have numbers in billions of dollars, but not ending up saving uh, enough from their revenues. So these ratio analysis is important in that regard. Then we'll also do some forecasting from the existing financial statements, and we try to develop the pro forma financial statements. Over here, the tricky part is the assumptions, and there actually the experience is very important. If one person is working in a particular industry for a very long period of time, he will be able to make better assumptions regarding the future financial statements. And finally, we will also look into the cash flow statement, that how the cash is generated by the operating activities and how it is consumed by the financing or the operating activity or the investing activity, where you might be spend investing a lot more things on the property, plant and equipment or other operating assets. If you go on the search engine and type SEC, you will get the first link for the sec.gov, and that is the web page of the Security and Exchange Commission of America. And the main purpose of the Security and Exchange Commission is that it's a watchdog, it's a regulatory body that safeguard the interest of the investor, number one. Number two, it ensures that the markets are performing efficiently. So there are efficient markets where all the information is available to all the investors, and then they can take the rational decision based on that information. So it's a regulatory body, and all the publicly listed firms need to periodically upload the reports and submit the reports on their website. So their system is ADGAR system, which is, I think, electronic data gathering and archival retrieval system, and all the companies have to upload their reports over there. So there are two more popular reports. One is 10K, which is the annual report. So company has to periodically, after every year, after every fiscal year, they have to submit their reports over there. Number two is 10Q, After every 3 months, those reports are submitted. That's why they name 10Q, 10 quarter, Q for quarter. And then there is form 8K. So whenever there is important material events happens, which can shape the decision, or help the investors to make an important decision about the investment or de-investment from the company, then those are reported through the form 8K. Within the 10K, these five important items are very important. Number one item is big business segment. So for example, Lululemon is a company, and there is if you go into the item one, we can see that the business of the Lululemon is regarding producing, designing, producing and marketing the athletic apparels, and the products are their products are pants, short tops and jackets regarding for the yoga purposes, running purposes, training purposes. And they also produce the fitness related accessories like bags, mats and other equipment. So the business segment, within the business segment, their products, the scope of their services are presented. Then item number 1A mention the risk. Sometimes it's very generic. For example, all the companies are subject to the systematic risk. So those risks or any firm specific risks are mentioned over there. You can at least glance over those risk factors to understand that what risks are basically posed to the company, or and these risks, though many times they are like mentioned, the same risks are mentioned for all the companies, but there could be some very company specific risk, and the company specific risk has to be given importance, because systematic risk cannot be avoided, but a firm specific risk can be avoided by doing the diversification in the investment. So rather investing everything in one company, we can invest in many companies from different sectors and different industry. Then item number 6 will present your the selected consolidated financial data, for example, earnings per share or any other important data. So that is hand-picked or cherry-picked data, which is mentioned over there. Item number 7 is very important to understand the company's plan, and that is called the management discussion and analysis of the financial condition and result of operation. So what is the view of the management on their operations once the fiscal year is completed, like what they believe they have done good, or if they believe that there is some room for improvement. This section is very important. You need to thoroughly read that section to understand the view of the management about their operations, successful operation of the company, or what they feel that where there is a room for improvement, because this also give you an idea that what management is feeling and what strategies they have pursued in the past, and they are looking to pursue in the future. Then item number 6, your financial statements are actually, and supplementary data is mentioned in item number 8. So you will get your financial statements from the item number 8. And in within the financial statement, you simply see the inventories. Now if you want to see the breakup of the inventories, that okay, how much is the raw data in the inventory, what is the finished goods present in the inventory, and what is the work in progress and their numbers. So those you will be able to find in the notes of the item number 8. So the notes are available just below the item number 8. So let's go and see that how we actually go, like what sort of the 10K reports looks like. So I went on the search engine, Google search engine. I simply press SEC, and here is the first link I found, sec.gov. It's a US Security and Exchange Commission website, and I'll go into the company filing, and I'm looking for the Lululemon because it is listed on the NASDAQ, and they report with the US Security and Exchange Commission. And the Lululemon is the Canada based company, but it is listed in the NASDAQ in US. Uh, this is a Vancouver-based company, and it is responsible to design, manufacture, and market the athletic apparels. These days, the stocks of the US of the Lululemon is doing very well. In fact, in the last 2 weeks, it touched 393, and then 2 days back it was down to 313. But it has shown a tremendous growth in terms of revenues and profitability for the investors. So let's start with that company. If you go into the company filings and type the ticker, if you do not know the ticker of your company, you have to Google search it, that what is the ticker, with what ticker it is traded on the New York Stock Exchange or the Toronto Stock Exchange, whatever is your company, wherever it is listed and traded with the ticker. So the Lululemon ticker is LULU. So you can see it's a Lululemon Athletica. And if I'll click it and or search it, uh, give me a second. So Lululemon, and I clicked it on it, and here are all the reports submitted by the company, right? So you can say it's 10Q. And what is 10Q? It's the quarterly financial statements, like what has happened in the 3 months, right? And 8Ks are those reports on those material uh, information which is important for investors to know. So all the companies have to present their important events through the 8K. For example, if they are planning to change the CEO, or there is some important decision happened in during the meeting of board of directors, it will be presented in the 8K. But we are looking for the annual statement, which is 10K. So 10-K, if you press, you will get all the 10K statements. Can you see that? So this 10K statement is basically filed on 26th March 2020. And this is for the fiscal year 2019. Remember, this, like when the 2019 year will end, after that the company will be able to consolidate their numbers and submit the report in 2020. So it means even though it is filed on 2020 by the company, but this is the annual statement of the previous year, which is 2019. Now if you'll go into the documents, the first link will take you to the 10K, and it is loading. So this is the 10K form 10K, on which everything is uploaded. The annual statements are uploaded. We need to see the business risk factor. This is important for us. The management discussion and analysis, that is very important. Selected consolidated financial data, item 6, and the financial statement and supplementary data, and the notes to that financial statements, which is item number A. So these 5 items are very important for us. There are tons of other information, but while doing the financial statement analysis, remember, the financial analyst might have to do the analysis very quickly, sometimes in a day, for 5 or 6 statements in a day. So he might not have enough time to go through each and every detail, but go look for those most relevant information which can give an fair bit of idea, about 90% idea, or of the financial health of the company. So always look for the business, because if you do not know what business the company is into, just mere doing the financial analysis won't help. So look for the item number 1, always read that. Risk factors are very much generic. Try to find the the company specific risk factor. So for example, for oil and gas, because of the like political views about the fossil fuels, though like many people are actually like many governments, they are discouraging the use of oil. So that's a very specific factor applied to that sector only. So look for this company specific or industry specific factor and the risk factor, and leave the generic factors outside. So Then you have, as I told you, item number 6, the third one, selected consolidated financial data. Sometimes if you need to know earnings per share or anything, you can directly go over here and the data will be available over there. Then item number 7 is the management discussion. Over there, the views of management about their own performance. So this is a self-assessment tool, and also the plan of the company and what are this, in order to know the strategy of the company, that how the company is trying to pursue like its goals by developing this strategy is mentioned over here. And then the main thing from where you will get the number is financial statements. So all the financial statements, your cash flow statement, your income statement, your balance sheet statement is mentioned over here, financial statements. And if you want to know the breakup of any line item within those financial statements, the details of them are mentioned in the notes. So if you want to see the business, you simply click over here. So over here, the company's general business is mentioned, their product is mentioned, and what market they are into, they are mentioned over here. And then if you look for the risk factor, so all these risk factors are mentioned over here. They also might have mentioned over here about the COVID, right? That what could be the impact of the COVID. Look over here. They have mentioned about the health pandemic because of the economic activities throughout the world is suffered because of the COVID. So obviously it can have a negative impact on the flow of the goods. Can you see that? It can negatively impact the flow of the goods. So look for the specific risk factor of the company. Then, as I mentioned, the selected consolidated financial data, item number 6 is important. So over there, all the selected things will be mentioned. Earnings per share, basic earnings, diluted earnings per shares, inventories. So only the selected ones are mentioned over here. And then you have an, in fact, item number 7, which is the management discussion, right below the item number 6. And you can see that the power of 3 is the strategy of the Lululemon, and the 3 things on which they give the importance is product innovation, the guest experience, omni guest experience, and the finally the market expansion. So when you will see into the market expansion, you should already have this idea that they are trying to open new stores. So they are trying to like open new stores. So obviously with market expansion, you expect their revenues to grow as well. So these things should be linked with the number. So numbers in the financial statement should support what strategies they mention over here. So this item is very important, markets discussion and analysis of financial condition. Carefully go through this item number 7, very, very important. Finally, you have item number 8, right? Item number 8. So if you click it over here, you can see that the item number 8 will give you the balance sheet, the statement of operations, which is also the statement, income statement, and the cash flow statement. There are other things as well. For example, the statement of shareholders' equity. So if you will click on this, then you will see that how the within the equity line items, the balances are changing, but we will focus more on balance sheet, income statement, and the cash flow statement. And then also the cash flow statement is given over here. So if you see within the balance sheet, you can see that in the balance sheet, all these assets are mentioned, and then below the claims on those assets are mentioned, that these are the total assets, and just below the liabilities are these. So if you add up the total liabilities and total shareholder equity, this should be equal to the total assets, 3,281,354, which is also over here. By the way, these numbers are in thousands except per share amount. So these are already in thousands of numbers. So if the income statement for the last 3 years are mentioned, and you need to take these numbers into your Excel file. So over here you need to take these numbers into your Excel file as well, and how the Excel file should be prepared. And if you see the Excel file, they start with the balance sheet of your main company over here, right, where three fiscal statements will be given, and then this is actually not the 12 months ended, because balance sheet is not about the period, it is about a single point in time, right? So these are the numbers, this is the position of the assets and the claim on the assets in terms of liabilities and shareholder equity on 28 January 2018. So the 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 fiscal year of the company can be different than the annual year. For the Lululemon, the fiscal year ends on the 31st January. Uh, so this is the reason why 28th January is mentioned over here. Might be just the normally on 31st or 30th it is expected to be a holiday. That's why they have given the number uh, of the asset, liabilities, and equity on 28th of the January. What was these figures on 28th January, and then February. But if you see, they are around 31st January, because that is the date on which the fiscal year of a company ends. When the data for the 2nd February 2020 is given, it means it's the like the these are the reports uh, um related to the financial statements of 2019, even though it's on that particular date, 2nd Feb 2020. Now, why the fiscal year can be different than the annual year? There could be many reasons. For example, they are in the cyclical business, and most of the shopping happen during the Christmas break and after the Christmas breaks in the January. So they need to sell more items near that winter breaks, and they want to close the statement on the 31st January of each year rather the 31st December of each year. Likewise, for the Walmart, the almost the same thing happens. They close their statement on 31st January. Now, income statement is for the whole 12 months. So it means from 1st of February till the 31st January 2020. This is the report. Uh, this is the report of the financial performance of the Lululemon in the whole year of 2019, 11 months of 2019 and 1 month of 2020. They generated this much revenue. Remember, these numbers are all in thousands, so it's 3,979,296, but these numbers are actually in thousands, right? So in the same way, we have the the reports or the numbers for the other years as well, and these numbers are coming from here, from 10k, 3,997,000. You can see the total revenue on the earned in the whole fiscal year of 2019, which is mentioned over here as well, right? And this is the comprehensive statement over here, and sorry, this is the net income, 645,596, which is the same thing over here. So all these numbers are reproduced in a separate tab for the Lululemon and income statement. Some of the analysis for only which we'll do on the balance sheet will do in front of it later on, and the income statement we can do in front of it. Likewise, you need to have the cash flow statement of the Lululemon in a separate worksheet for the Excel. And in the same way, we will do for the competitor. We need to put the competitor balance sheet in single worksheet, and its income statement in a separate worksheet, and its cash flow statement in a separate worksheet as well. So uh, this is actually not the Lululemon cash flow statement. I think I was calculating the ratio analysis, doing the ratio analysis on the Under Armour, and its competitor is Under Armour actually. So, but you got the main idea. The main idea is this, that for the balance sheet, income statement, and the cash flow of the company and its competitor company. If you have its competitor company, they all need to be in separate worksheets like this. So separate worksheet for the income statement and separate worksheet for the cash flow statement, and the same thing needed to be repeated for the competitor. Now if we'll come back to our statement, we can see that the item number 8 is mentioned in the under the item number 8 you have these financial statements. And if you want to know a particular detail about a line item in one of the financial statement, then for example, if I need to know that within this thing, in the property, plant and equipment, this is the final number given over here, 671,693. But I want to know the breakup of this, that what is actually present in the property, plant and equipment, and this will be below in the notes. So you can see that there are notes given. So you simply click on the note about the property, plant and equipment and go over here, and you can find the breakup of the property, plant and equipment. So it's very easy to navigate through these statements. And if you want to know about that from where that number is generated, always look for the notes. So this is actually the breakup of the property, plant. In fact, the breakup of the property, plant and equipment, this one, which I have just shown you in the previous statement. This is how you will find the data from the 10K reports and import it over there. Now, some people might be thinking whether they have to type or not. There is another approach to this. The approach is this, that once you write the 10K, um, and you go into the company's filing, just bear with me, go into the interactive data. Within the interactive data, there is a financial statement. So you can simply click the consolidated, any of this link, and download the Excel file. There will be many reports that will actually get downloaded. Only keep the 3 reports, which are the income statement, balance sheet and the cash flow statement report. After downloading the Excel file and getting the financial statements of our company, try to do formatting so that it looks presentable. For example, look what I have done over here. Within the assets, I indented the current assets, and then just to show that these line items are under the current assets, I further indented them. And then the long-term assets, I appropriately intended with the current assets, and these line items within the long-term assets I intended like the current assets within the current like the individual items within the current assets. So this is just to show it will make things easy for you to read that what items line items are part of the long-term assets and what line items are the part of current assets. Likewise, I did for the liabilities and the equities. Over here, if you see these numbers, I checked their sum. This was number which I got as it is, but over here I use the formula, this formula, and double check that after adding all these line items I am getting the same number which is given on the 10K. This is just for the double checking of these numbers. I have experienced a situation where these total current assets have the different number compared to the sum of these line items, which it should be equal to. But this will just give me the assurance that my line items numbers are accurate and I'm doing the analysis on the right numbers. In the same way, do for the total assets, for the liabilities and the equity. Likewise, on the cash, on the income statement, like I'm using the formulas. For example, in case of net income, you can see I am subtracting E11 by E10. So E11 by E10, where E10 is the EBT, earning before tax, minus the income tax. So I'm getting the same number which is mentioned on the 10K financial statement, but just it will give me the assurance that the numbers which are given on 10K, they are accurate and there is no mistyping happened, that because eventually it is possible that a typo can occur and even the numbers are miscalculated on the 10K. Very rare, but there is a possibility, but we cannot take a chance on that. We need to just ensure that numbers are fine. So this is how one should do the initial formatting and put the balance sheet, income statement, cash flow of the company, or if there is a competitor company, in the separate tabs, so that if there is any analysis on the balance sheet, only do it in front of this income statement, then do only in front of that. For example, the Waha analysis, vertical and horizontal analysis, the other names of the common size or comparative analysis, we need to do in front of them. But for the ratio analysis, we need to have a separate tab. Now, this is all for this from this lecture. If we will wind it up, we have seen that what is the important step of the financial statement analysis process, and we just discussed them. We also saw the 10K report. This is an annual report and how we can find it from the Security and Exchange Commission website. And we also discussed their important 5 items: item 1, 1A, item number 6, item number 7, and item number A, and notes to the item number A. And finally, we also see that how to get the financial statements in Excel. There is an interactive tab, a link. We can click it, download the Excel file. Only keep 3. There will be many worksheets downloaded in that Excel file, but we only keep income statement, balance sheet, and the cash flow statement. And also, we have seen that it is a more prudent approach to keep the statements in separate sheet. So the income statement should remain in separate sheet, balance sheet and cash flow should remain in separate sheet. So there will be 3 separate tabs for these 3 statements of a company. And if you have a competitor company as well, you need to have 3 more tabs. Means income statement of the competitor company should come in a separate tab. Likewise, the balance sheet should come in a separate tab, and the competitor company's cash flow statement should also come in the separate Excel worksheet. Thank you.